Welcome back, and let's go straight over to some requests. And first of all, gold in dollar terms. Everybody in the world is now running into gold. Everybody in the world believes that gold can just go higher. And I just want to put in something here. And I know I'm going to look at a daily chart here, but I want to show you something. I just want to change that setting because I sometimes like to use 1433. But if you look at gold here, look at the stochastic is right at the top. That tells you that the price had a beautiful rally already. And what have we seen in the past? Every time that it gets there, it can easily turn around. Now, I can remember Dr. Clive Roffey, he was always keen to show this. And then he will do that, and he will say, listen, look at your oscillators. And I know he had a unique set of oscillators. But for me, it's quite simple. The moment the stochastic is stretched at the top, then usually you get a breather. And everybody just want to buy gold now, and they believe that gold can just go higher. Yes, there is a beautiful inverse cup and handle on the gold price, and it can push it well above 2,000. But for me, I've always seen that somebody's got usually a beautiful long-term view on a chart. They buy it, they put it away, and then they say, this is for the future. And within a week, the chart turns around, and suddenly they become daily traders, and they want to sell the stock or the commodity out. Now, look at gold here. The big level that it had to break was the following. I just want to move that out. There you are. The big level to break was 1959. Let's make it 1960. It went up straight above 2,000. Everybody's happy about that. But now I want to show you something here. Look at this rally from 1,810. It's $200 in a matter of about, let's say, 10, 12 trading days. That is a beautiful rally. Look at your 50-day moving average. That sits at 1,881. That's that red line. Beautiful rally. And what does it show us? Sometimes if a chart just run away from this 50-day moving average, it comes back. Look at that. It can maybe come back. And now I want to warn everybody. Gold can easily, when it gets below this level of 1959, come around and pull back all the way down to 1,880, and from there maybe resume the uptrend again. So be a little bit careful just to chase gold when it's rallying like it's now. Yes, it is a beautiful rally, but look at that. Even this period, it rallied all the way from 1,803 to 1,950. It came back all the way down to about 1,800. So it always gives you a chance to buy back in. So be a little bit careful. We can maybe sit here on an irregular double top. We'll have to see in time to come. But just be a little bit careful just to chase gold and believe that it can just go higher in almost one line. Now, let's have a look at Harmony. Exactly the same case here. Everybody believes Harmony must now go to 100 Rand. Look at this beautiful rally. Remember that gold chart? It almost did exactly the same. From about 54 Rand, it went into 1, 2, 3, 4, let's call it 10 trading sessions, all the way up to 76 Rand. And I know some people say, you must never look at the percentage rise in the share price because it can always go higher. Now, I can tell you, if you are a trader and you bought at 54 Rand and that share price is 76 Rand within 10 days, I'd bet you $1. Those traders will come in and they will just lock some profit in and say, let's just buy it back. Now, Harmony, beautiful share, but there's something that worries me a little bit. Look at this strong candle up. But look at this upper shadow. That was on Monday. Look at the strong move. And look at that shadow. Now, that high of that candle was 76 Rand. Okay, it opened right at the bottom. It opened at 68.85. But there's a little bit of a breakaway gap. And I also see another one here. So just be a little bit careful. If you use the stochastic again, let's just put it back again. And you will immediately see what I'm seeing here. Very much so oversold. It's overbought, not oversold, overbought. And what I don't like about it, look at that. There's already a divergence there. And look at that beautiful rally. So yes, be careful to chase harmony. There's these two gaps. Let's just mention them to you. 68.85. That one closes at 67.58. This one will open at 58.16 and it will close at 58.01. And remember, I always say, and we've seen over the years, that gaps, especially emotional gaps like these, has the tendency to close in time. So be a little bit careful. Let's look at the giant, and that is Tencent. That is the share that drives Naspers and Prosus. And look at that stochastic, exactly the opposite here. It's showing us a beautiful divergence to the upside. The share price is still coming down. So I may be a little bit positive on Tencent. And we all know if Tencent picks up, usually you see Naspers and Prosus doing well. And there's always also another index that usually moves quite nicely if Tencent goes up, and that is Hang Seng. So I think emerging markets has been hammered a lot, and maybe we can see a little bit of a pickup here if you look at this chart. Look at this descending channel. Descending channels are usually positive channels. Eventually, while it's coming down, it's not positive. Then it can go lower. But when it turns around, it can usually give you a beautiful rally. And first of all, there's that tiny little gap there. It needs to close that. Where's that gap? That gap sits between 3.8 and 355 on the dot. And where will this chart actually break to the upside? Let's get the level there. There's the level. That channel will break. There you are. I just want to draw it incorrectly quickly. That will be the upper shadow there. There you are. It should break above 347.6. And where can it go to? If it starts to go this descending channel, if I do the projection here. And I've seen somebody the other day showing me some charts because I needed to mentor him on daily trading. And he had so many things to look at. I think eventually he got himself confused. And that is the golden rule with technical analysis. Never look at so many things that you confuse yourself. A simple chart is usually price action, showing you emotion, telling you what to do, telling you not what to do. And I always say that people that follows me on Twitter, where I show usually what we do in the Aussie day by day, you will always see it's 100 points, it's 50 points, it's 200 points, maybe in the bank, then there's a loss here and there, then the system works well, then the system doesn't work well. The bottom line is always take the easy money. So if you look at this descending channel, we gave you the level of the break to the top. My stop loss will be the low of that candle. It will be 330. And where's my target? My target is, if you do the extension, it can take it all the way up to 385. So hopefully, for those that's keen on Tencent and Naspers and Prosus, maybe we can see a little bit of a bounce. Let's have a look at another one, Ferrari. Everybody's keen on Ferrari. I mean, this company is doing well, and I'm going to look at the one in Milan because that's the mother company, and everybody's just buying this company. Everybody believes it can just go higher. But for me, I'm a little bit worried. Look at this, like you almost could see a tower top. That tells you that the share price had a massive rally. And let's just have a look here. That's what's worrying me. A left shoulder. There's the head. There's the right shoulder. Look at the 50-day moving average. For me, the 50-day moving average and this neckline is exactly almost at the same point. Below 239. Doesn't matter if Ferrari have cars that I cannot and you cannot afford. Below 239, we can easily see a sell-off. And where can it take to? Because we're running out of time here. I'm just going to do the projection quickly. Below 239, this wonderful company can maybe just surprise us all to come down to 226 in time to come. And that's maybe the place again to buy it, because then you've got the head and shoulder played out. But oopsie daisy, I'm worried about this gap. We haven't got time to look at it, but hopefully it never closed this gap. Thank you for watching the program, and visit our website www.fransklerk.com for more info, and we will chat again.